Hello, everyone. Welcome to the Money Talk, brought to you by Bartelle's Financial Coaching. I am Theresa Bartelle, financial coach.
I'm Johnny Bartelle, co-host and spouse.
And today we are going to be telling you how to get your bang for your buck with the 2024 tax preparation. You need to stay until the end of the video so you can see how you can maximize your 2024 tax savings. Enjoy the video, and if you do, subscribe, share, and like. Thanks.
Well, hello there, Nate. How are you doing today, sir?
I'm doing great. Thank you so much for having me. I'm excited.
Wonderful, wonderful. Could you please introduce yourself and tell us a little bit about yourself?
Absolutely. My name is Nate. I've had the pleasure of meeting you at church and through a mutual ministry that we're involved in. So that has been an excellent experience. And we just started having a conversation, and you found out my background, which is in finance. So I'll start there. So my education is in finance. I have a bachelor's and a master's degree in business administration. I've been in the investment industry for over 15 years. At one point, I was a financial planner. I was a registered tax preparer. And so that all sounded like something you wanted to discuss here in your channel. So I'm excited.
Yes, well, thank you so much for joining us, and we appreciate it very much because, as you know, it's 2024 and we are in the tax season now, and some of us are getting our stuff together at the last minute. And so we'll just jump into the questions. And so, my first thing for you is, what are your feelings about individuals who get big tax returns?
Oh, that's a really good question.
Good
Okay.
news.
All right, so I have a perspective on that. I'll give you the perspective from the typical financial planner, what they will tell you, and then I will tell you about my experience with people in general and why I do what I do. So let's talk about it for a minute. Why are we getting a big tax refund in the first place, right?
Right.
So throughout the year, if a typical person had a W-2 income, that means they're over withheld throughout the year, and or they didn't make as much money as they thought they were going to make. So now you're filing your taxes. The year 2023 is behind us. You file, woohoo, you get money back. That's great.
Uh-huh.
That's a big amount of money, right? Now, here's the thing to consider. First, you're getting money back, but you didn't get any interest on that money.
That's right.
So, typical financial planner will tell you what you want. The ideal scenario is when you file your income taxes, you break even. You don't owe, they don't owe you, you break even, okay? And then the next thing they'll mention is if you're getting a big tax refund, that means you have extended an interest-free loan to the government because they've had your money that whole time with
Uh-huh.
no interest. They're not going to pay you interest on it. They're just going to give you the refund when all the numbers are said and done. So here's the kicker, though. Have you guys ever been on a diet?
Oh gosh, I live on
Yeah.
them.
It's the beginning of the year, right? We have resolutions. We're doing this and that. Okay,
Uh-huh.
let me ask you a question. What's the best type of diet?
Ooh.
Well, in my mind, the best type of diet is to eat in moderation and eat what's healthy for you. But actually, what is the best diet?
Yeah, the best diet is the one that you're going to stick to,
Wow, that's
Mm.
good.
right?
Okay.
Because we can have the right answer, but if we don't follow it, it does us no good.
Right.
That's
So,
true.
the financial planner will tell you want to adjust your withholding so that your tax situation at the time that you file, you break even. You didn't extend any free loans to the government. The problem is that a lot of people, especially in the world of finance, they don't have the discipline, the personal discipline to do that. Okay. What happens when you get a raise in your check? What is human nature intuitively push us to do?
Spend it,
Yeah,
spend it.
spend it.
You adjust your spending automatically,
Right.
Mm-hmm.
right? So if you got to raise whatever 1-2%, let's say, and that turns out into let's say $100-$200 extra per paycheck, we don't have the discipline to take that money and save it or invest it or pay off debt. No, we say, "Whoa, I got $200 more. Hey, let's go spend it. Let's go have a fancy dinner," right?
Right.
And then over time, we adjust to that and we adjust to that. The same thing happens with withholding. So I have found one of the things that are very successful, for example, in investment, is your 401k. Do you know why 401ks are so successful in helping people save for retirement?
Well, for me, it's because you cannot touch it, and if you touch it, you get a huge penalty.
Mm-hmm.
Exactly, because the government will slap your hand hard if you try to touch that money. So we stay
Right.
away from it, right? The same thing happens with your withholding. So my personal experience, okay? So the financial planner is going to tell you, hey, adjust your paycheck, your whether you're married, single, whatever your deductions, adjust those so that you break even. I'm going to tell you this. Most people that are married, have a family, it's very hard to adjust down to a single zero, right? Single zero. So when you fill out your, I think it's a W-4 for
Uh-huh.
Mm-hmm. Yep.
the federal taxes to be calculated, how much they're going to be taking out of your paycheck. When you fill that out, you're telling the government at the end of the year, I expect to file my tax return under this, married, single, whatever, and I expect to claim these many deductions, 0, 2, 4, whatever it is, right? If you can stay at married zero, even if you have kids, if you're married and don't have kids, if you can get away with budgeting your day to day on a single zero withholding, then at the end of the year, you're going to get a refund. Okay.
Okay.
During the year, every paycheck, just in the same way that nature gets us to adjust up and we overspend,
Uh-huh.
the same way happens when it's tight, right? If you can
Uh-huh.
stick at single zero, you adjust. You don't spend as much, you don't go out as much, you adjust. The end of the year, when you file your return and you get all that money back, that functioned for you as a forced savings instrument. Yes,
Right.
you're missing out on interest rate, but let's be real. What are interest rates paying right now? I mean, how much of a refund are we talking? You're talking $5,000, $10,000, 15 if you really overdid
Yes.
it. How much interest are
Uh-huh.
you going to get on that during the year when interest rates are so low? It's really,
Yeah.
small. And I think that the
Right.
psychological impact of getting that money back, being able to immediately knock out debt, immediately do other things, is so
Mm-hmm.
much more helpful to gain momentum in your financial picture overall. So that's my opinion on that.
Okay. And so, like when you mentioned the withholdings, what if someone really doesn't know how to adjust their W-4? Do you recommend talking to HR or a CPA? How would they go about doing that?
Yeah, that's a good question. It's a super simple thing to do. Um, HR, if you talk to your HR department, they'll give you the form and ask you to refill it. You can fill out the form yourself and hand it over to HR.
Okay.
Just go to the IRS website, look up W-4. The form itself comes with instructions. So the instructions, to be honest, it's kind of clunky because there's
Uh-huh.
there's a lot of things that they tell you. Well, now consider this, consider that, consider this. Easiest thing to do, and I'll mention something right after this. Easiest thing to do is think about your personal situation. If you're married, if you're single, the lowest you can go is single zero. You can't go. That's as much as they'll take, basically, single zero. So if you're married, if you have children, I wouldn't adjust more than married zero. That's a good place to start, and then see how it goes. If at married zero you're able to get by, then stick with it till the end of the year. There's a couple other things that I recommend doing. First thing I wanted to mention right before we started is this is a conversation between friends, right? And we're having a conversation about ideas and things that we can try. But
Right.
I highly, highly, highly recommend please have this discussion with a professional, someone that can see your entire financial picture,
Right. Okay.
Yeah.
because these things talk to each other. You make a change in your investment portfolio, that's going to impact your taxes, that's going to impact your retirement fund, that's going to impact your cash flow. Any one of these things you touch, they're all interrelated. So you really want someone that has full picture of your specific situation, what's happening. So that's number one. And
Okay.
then the forms are available to everybody. And if you have any questions, most HR associates will be able to walk you through it or give you some info on how to fill it out.
Okay, and honey, I want to ask you one more
Go
question based
ahead.
on this.
Absolutely.
Like, I did have a friend several years ago that she would claim like five on her W-4 so that she wouldn't pay any taxes. Are you familiar with that? And if you are, what is your advice for people who do that?
Yeah. So the government's and your employer is not going to keep you from filling out that form, right? You
Uh-huh.
you can put 100 deductions on there and they will take $0 out of your paycheck. Now, what happens though at the end of the year when you go file your taxes? You're going to get hit with a huge bill. All right. Now, the way the IRS calculates their penalties, it's not straightforward. It's not just, oh, this is how much you owed. This is how much you didn't pay. Okay, now pay us that amount. No, the way they do it is they go back and they look at the entire year and they say, okay, quarter one, were you already short then? Yes, we're going to hit you with a penalty then.
Oh,
Quarter two, were you short then? we're going to hit you with a penalty then. Quarter three, quarter four, they'll hit you with a penalty. And every time you went over or under, actually, say, for example, going back to quarter one, they will charge you interest for what you should have paid and didn't. So it's like rules for thee, but not for me. The
Mm-hmm.
IRS, I think yeah, so the IRS, that's how they're playing, right? So if you owe them money, they will charge you interest and penalties on that. If they owe you money, they're not going to pay you interest. They're not going to pay you any reverse fees or reverse penalties.
Wouldn't that be nice if they did?
Yes, yes, it would.
Oh my goodness. Well, Nate, wow, that's a lot of great information. So I'm gonna tie the next thing is tax brackets. I want to tie that into this because I think a lot of times, they're kind of confusing, or maybe people don't really understand, with tax brackets. Not everybody. So could you explain the tax bracket and how it works?
Yeah. So the tax brackets are a tiering system, right? And the idea behind it, if you go way back, the idea behind it was we want to make sure that everyone's paying a fair share, right? So if you're making X amount of dollars and below, we're only going to tax you this amount. But if you're making this amount, then we're going to tax you this amount. If you're making way up here, then we're going to tax you this, right? So it's a tiering system. And now the way it works though is the second your next dollar bumps you up to the next bracket, that's it. Every single one of your dollars that you earn after that is going to get taxed at that rate. So you're the more you make, the more you're going to have to pay. Right? That's sort of how it works. Now, for the most part, and they did change the tax code when President Trump was in office. So they did alter the way the brackets work and the way the standard deduction works. So that's bigger than it used to be. I think the majority of people now typically fall under that standard deduction.
Mm-hmm.
But if you're a homeowner, if you're you have property taxes, you have mortgage interest, and if you're donating, so like if you're a Christian, you're paying your tithes,
Mm-hmm.
that's tax deductible. If you didn't know that, that is a charitable contribution. So
Mm-hmm.
all of that may make it so that in your particular case, you are better off itemizing deductions versus taking the standard deduction. But all that to say, the tiering system still works the same, just the
Mm-hmm.
brackets were adjusted a couple of years ago when the tax code was updated.
Okay, okay, so that makes sense. And so I'm hoping that we have some high income earners that are going to be watching you in this video. So can you tell our high income earners some things that they can do, I guess, for tax year 2024 to help cut down the amount of tax that they can do legally?
Yeah, I mean, that's a good question, and that was the clients that I used to serve, high net worth. So there are so many strategies. In fact, there are more strategies I would say for high income earners than there are for low income earners. One side note I'll make: the American tax code is quite interesting.
It
But one of the things I want to mention is I want to dispel that notion that high income earners can get away without paying taxes.
Thank
Okay?
you.
That is a hoax. That is not true. You you the American tax system is designed in such a way where yes, if you are creating jobs, if you have a business, if you're doing certain things, there are incentives that you can take advantage that are perfectly legal that the government allows in order for you to continue to generate business, right? Improve our economy, create jobs. But all in all, everyone has to pay a fair share. You'll see, the media say, "Oh, certain politician, oh, look at their tax return. They paid zero tax. How can that
Mhm.
be? They're so wealthy." Okay, that to an income tax professional, that only demonstrates how ignorant the media is about our tax system. Okay,
Wow. Okay.
we have we don't just have individual taxes, we have business taxes. So if this individual has a lot of businesses, they're getting taxed at the business level, and then when it passes through to their individual tax return, they're getting taxed again. So they're paying their fair share. In addition, in the tax code, there's an additional form of tax. It's called AMT for short. It's called alternative minimum tax. If you hit certain thresholds, where, for example, you're claiming a lot of deductions, but your income is very low, you will trigger AMT. And AMT is designed to ensure that everybody pays a fair share. So instead
Oh,
of calculating your tax with a normal brackets like we just discussed, AMT rules kick in. And so they take away a lot of the deductions and a lot of those things, and they force you to pay a certain amount. So all that to say that someone is very, very wealthy and getting away with paying very little tax, that's a hoax. It might
Okay.
not show in one form. It's
Uh-huh.
probably shown in the other tax forms they're filling out, but everyone is paying their fair share. Now, I went away from your question. Can you remind me what it was?
What ideas or what things that you can recommend to high income earners to help save on taxes that's legal? Because honestly, none of us really like to pay Uncle Sam.
That's right. There's a lot of things. So first of all, if you're saving for retirement, making contributions to your IRA
Uh-huh.
are tax deductible, right?
Okay.
So most of us don't have whatever the limit is now. It used to be like $6,500, $7,000
Mhm.
every year. They tweak it. Most of us don't have $7,000, $8,000 at the end of the year to just drop and pop into a retirement account. But if you're a high net worth individual, then yeah, that money is disposable. You can do that. If you have children that are going to go to college,
Uh-huh.
you can take advantage of a 529 account. And what most people don't know is the 529 plan account will allow you to lump together up to 5 years worth of the amount that you can contribute and give it all boom in one go. So if you have a lot of disposable income in a particular year and you're trying to figure out how to improve your tax situation, that's another thing you can do. Most people with a lot of assets, a lot of cash, a high net worth will have investment accounts, taxable investment accounts. One of the things that we used to do for our clients towards the end of the year is something that is called tax loss harvesting. So
Hmm.
throughout the year, you've been invested, right? And your stock has been going up and down, and your
Uh-huh.
portfolio it's going in every direction. Some stocks have done great, some stocks have done poorly. If throughout the year you've already sold them, you've realized those gains. So you're going to have to pay taxes on it.
Okay.
So what we would do is at the end of the year is we would look at what the gains look like, and we said, "Hey, Johnny, we looked at your portfolio, and it looks like so far right now it's November. We're projecting that you're gonna have $50,000 in gains that you're gonna have to pay taxes." So what we would then do is we would look at the portfolio and we would look at the laggards, the losses that you have in the portfolio that you haven't realized, and we would realize them because what the tax code allows you to do is before they tax you on your gains, you can net your gains with your realized losses.
Okay. Thank
So
Oh,
you for that.
I didn't know that either.
so we would try to get that number to almost zero, close out the year. The tax bill for gains gets reduced almost to nothing. You have to wait a period of at least 30 days because otherwise you will trigger something called a wash sale rule. But once you wait that period,
Oh,
you can get right back into the same things that you sold in February. So you
Mhm.
sold it in November. By February, you should be safe from triggering wash sale rules. You get back into that position in February, and your portfolio looks identical, just like it did in November, but you avoided your tax bill.
so
So, yeah.
so Nate, could you explain the wash sale rule? Could you explain that? Because that was pretty.
Yeah, I haven't heard of that.
Yeah, could you explain that?
Yes. So the wash sale rule was a rule that the IRS instituted in order to prevent people from abusing what I just described.
Okay.
Right? So you have a lot of gains, you don't want to pay taxes, so you go and you sell a bunch of losers and you get to zero.
Uh-huh.
You December 31st, you're done. January 1st, you go right back in, you buy them all back up again. Your portfolio looks identical, but
Mhm.
you avoided paying Uncle Sam any money.
Got it.
Okay? Uncle Sam says, "Whoa, whoa, 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 whoa. You just shortchanged me. So this is what we're going to do. If you get back into that same position you just closed within 30 days, I'm not going to count that as a loss. I'm going to
Oh,
disallow it."
oh.
So,
Pay tax.
Yeah.
wash sale,
Yeah.
yeah. The term
Yeah.
wash sale means that it's a wash, right? You had a loss or you had a gain, you realize the loss, you realize that you close the year, you get right back into that position. It's a wash. It's a wash.
Got it.
But the government got smart and said, we're not going to let you get away with that. So you have a 30-day window before you got into the position and after. And if you transact in that again, that's going to be a wash sale. So we're not going to allow that loss at all. So that's something you got to be
Oh,
very, very careful if you're going to try to do tax loss harvesting at the end of the year. You got to make sure you wait that period of time so that you don't trigger the wash sale rule.
okay. And all of this would need to be done by December 31st of that tax year. Is that correct?
Yeah, any gains or sales you have to do them by December 31st, so that that closes out the tax year. And then whenever it was that you realized your losses, you want to wait 30 days from that day, maybe a little bit more than 30 days to give yourself a cushion before
Mhm.
you get back into that same position.
Okay. Okay. So that
Makes
makes
sense.
sense.
That makes
I'm
sense.
glad you asked him that question.
Yeah, because yeah. Okay. Go ahead, ask the next question. Cause I've had number. Go ahead.
Okay. So my next question is atomization. Can you explain to the audience exactly what atomization means?
Yes. So in the tax forms, so your main tax form, the very front one, is 1040, right?
Okay.
1040, Form 1040 is the main form that summarizes all the other little forms and schedules that come after it.
Uh-huh.
Everything makes its way to that front form, and
Uh-huh.
that's where your totals are calculated. So your total income, your adjusted gross income, your taxable amount, the amount of tax, and then your net refund or liability due. That's all that main form 1040.
Uh-huh.
The next schedule after that, Schedule A, is your deductions or your itemized deductions schedule. What does that mean is the
Uh-huh.
question, right? Okay. So we already talked a little bit about what the standard deduction means.
Right. Okay.
Mm-hmm.
So you earned a certain amount of money, right? X amount of
Uh-huh.
money. The government automatically says, okay, you made this much, you're married, you're single, whatever, these are your deductions. Automatically, no questions asked, we're going to give you this standard amount that you can deduct from
Okay.
income. Okay,
Uh-huh.
so it's one X amount and that's it. And I don't remember exactly what it is right now, but let's just say for easy illustration, it's $25,000 for married filing jointly.
Uh-huh.
Okay, so married filing jointly, you made whatever amount of money. We're going to tell you, okay, your standard deduction, we're going to take 25,000 off the top, and that's that. No questions asked, that's what you get. If you think that based on the different deductions that are available to you as a taxpayer, that you actually are entitled to more than that, not just the standard amount, but you're entitled to more than that, then the government says, okay, itemize it. So I want you to list it out one by one.
Oh.
And so Schedule A is has all of those deductions. So in Schedule A, you're going to see your mortgage interest deduction, your property taxes, your charitable contributions, everything that you think qualifies is in that schedule, and you punch it in
Uh-huh.
your software, you put it in your software, and that schedule is going to itemize everything, and then it'll bring the net numbers back into the 1040. So
Oh.
that's what itemized deductions are.
So with the itemized deductions, does the itemized deductions have to be more than the standard deduction that's already given to you up front?
So like your illustration, you use 25,000.
Yes.
So the only way we could itemize is if we have $25,500.
Exactly.
Okay.
You
Got it.
over that. If you're not meeting that threshold, whatever the threshold is, if you're
Mhm.
not meeting that threshold, then it doesn't matter if you try
Doesn't
to
matter.
itemize. You're going to be better off. Most software is pretty smart about it.
Mhm.
They will the software will ask you, punch this in, punch that in. Did you have a house? Did you have a mortgage? Punch that in, punch that in, and then it'll do the calculation for you, and it'll tell you, you're better off taking the standard deduction, or it'll tell you, you're let's itemize. You're going to get more money. Okay, that brings me to another point I wanted to make. So 2023 is behind us. Nothing we can really do for planning for that.
Mhm.
It is what it is. The year is closed.
Mhm.
So it's from here on out, right? But there is one tip I can give you that may save you money. Again, it's not for everybody, but I suggest you do it no matter what, even if it's just for yourself. And this is prepare your own tax return. Okay. I,
Mm.
I did that for several years for myself and for other people. Professionally, I did that for several years, and I
Uh-huh.
can tell you, except for a small percentage of the American population of very high net worth individuals, the majority of Americans, your tax situation is usually relatively simple to do it on your own. Now, if you don't feel comfortable with it, I understand it.
Mm-hmm.
This is what I recommend. Go get yourself the software. It's, however much, they're 50, $70, whatever it is. Go get yourself the software, install it in your computer, and then just go through the exercise. You're gonna punch in all your stuff. The software is pretty good. It walks you through it. Okay, fill it out. Look at what the forms say, and then if you want to go pay a CPA, if you want to go to one of those services
Mm-hmm.
where they'll do it for you, go do it, but then come back home. If you're going to file with them, but come back home and then compare it to what you did at home, right? And if you start getting close, then hey, you're going to save, because those guys are not cheap. Let me tell you, those
No,
No, they're
those
they're
not.
firms.
not.
They're
They
not.
punish you.
Oh, you're walking out the door at least like 3, 4, $500 in
Yes.
fees
Oh
just
yeah.
for someone with a minimum level of education in the tax code data enter your info.
Right.
Right?
Mm-hmm.
So my recommendation is, trust me, the majority of Americans can file their own tax return. It's not that complicated. The software is super flexible, and I'm not endorsing anyone in particular.
Right.
There's at least there's three big ones that I know, and they're all comparable. They're all gonna help you out. So do that. Number two, if you do decide to go pay one of those firms to do your taxes, that's fine.
Mm-hmm.
Never, ever, 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 ever fall into the trap of getting an advancement on your refund.
Oh, you know what? You need to say
Oh.
that again
Oh yeah.
because I bet you someone is watching our video who believes in that. So can you say that one more time, please, Nate?
Yes. Never, ever, ever fall into the trap of getting an advancement on your refund.
Oh, people do that so much. I forgot about
Why?
Yeah.
that.
Okay, so this is what happens. You go into your tax preparer office, you give them the stuff, and they finish the numbers. Then they're like, "Hey, you're gonna get this much back," but the IRS is so busy and it's so much bureaucracy, and they're gonna take so long to get your money. But hey, for a small fee, we can give you that money right now,
Oh,
and then when your refund comes in, we'll just take it. Okay, sometimes they'll even go as far as this. I was watching an ad, I kid you not, watching an ad the other day. I was watching a football game, and they're dastardly, these guys. They're like, it's an interest free loan. It's an interest free loan on your refund. Go get it. Yeah, it's interest free because they're hitting you with a huge fee up front,
oh.
right? I've seen it. The first year I did, so I've been preparing my own taxes for, gosh, I don't know, like 15, at least 15 years, more than 15 years.
Mhm.
First year I prepared income taxes for one of my relatives, and they were one of those people that would walk into that office and just say yes, no, here's my W-2.
Uh-huh.
His taxes were like the simplest thing in the world. I looked at the receipt that they gave him, that they bury behind all the paperwork that they give you. $700. They hit him with a $700 fee for giving him an advancement on his money. Money that I told him, if you had filed this on your own, if we had e-filed for you, you would have had this already within 2 or 3 weeks. Can you live without the money for 3 weeks for $700? And I
Yes.
can guarantee you the answer was yes.
Yes.
So I can't do anything for you for 2023. That year is gone, but I can tell you right now, you can prepare your own taxes, or at least learn to start doing it on your own. And two, never take those extra things that they're trying to sell you on.
Thank you, Nate.
Yeah,
That was
it's
powerful.
powerful.
And I'm
Yes.
like, if
Yes.
even just one person listened to what you said and if it makes a difference in their lives, I'm like, thank you, God, because now you see it all over the place where they're talking about
Yeah.
tax advances, but I didn't think about that.
Well, and then on top of that, they talk about that, but they want you to get the advance so you can go out and spend it on that car or that, some whatever you spend on furniture, clothes. So
Mm-hmm.
get the money now so you can go out and spend it over here. So yeah, so that was good.
Yeah.
Thank you for that extra information that I didn't even realize to ask. Did you even think about
I
asking
did
that?
not. I did not.
So
No,
thank
I
you.
did
That
not.
was a very, very good nugget.
Yes.
Thank you.
Yes. Yes.
Yeah, no worries.
So so Nate,
There's
ex-
another one I can give you. This one is more. Oh,
Oh,
oh, you
please
yeah, go
can.
ahead.
do.
No, no, go
No,
ahead. Go
I want
ahead.
the
Go
nugget.
ahead. Go ahead, Nate.
All right, this one's a little bit of little planning. Okay, little planning. This one can't help you for 2023, but it can help you starting right now for 2024. Do you guys have a mortgage
Yes.
on your home? Yes. Okay, good. So do I. When you got your house, did the lender ask you if you wanted to be paying for your property taxes through them?
You
So on
know,
top of your mortgage every month, do you also pay a certain amount that goes to pay for property taxes, or do you
Oh
pay your own
yes,
property taxes out of pocket?
they did it for
they did
us.
it for us.
Okay. How about now? How about every year? Every year, do you have that big bill that you have to pay out of pocket at the end of the year, or is it just coming automatically whenever you're making your payments?
Well, we make the
Automatic
payments.
make the payment. Yeah.
Yeah.
Okay. Good. This is good. So
That's good.
again, well, no, this is good that we're having the discussion. I'm going to tell you what's
Okay.
happening. So this is another one of those like we were talking about, big refund, little refund, right? This one is, am I disciplined or am I not disciplined? Which one do I value more? Am I disciplined and like to save money, or am I not so disciplined and I'm better off paying off the money? That's the trade-off here. And
Mhm.
I'll explain why. Property taxes are the responsibility of the homeowner.
Okay.
Mhm.
Okay, you're the one that's supposed to make that payment at the end of the year. The bank, they often won't explain it to you. They'll just tell you about the benefit when they're doing your loan. They'll tell you, hey, we'll just include a portion of your property taxes every month so that it doesn't feel like a big bill at the end of the year.
That's
All
what
right.
they do.
Escrow.
Mm-hmm.
Escrow.
That's called an escrow account.
Mm-hmm.
Exactly. And it will show up on your form when you're filing your taxes and you get the form that has your mortgage interest information. It'll
Mm-hmm.
show there how much you paid for real estate taxes.
Mm-hmm.
Now, here's the part that they don't tell you. That service is not free. You're getting charged for it. You're getting charged for someone take your money every month, and then at the end of the year, they, the bank, will make that property tax payment for you. That service is not free. You are paying for it. So if you're disciplined enough, if you have the discipline, which is what I do, and there's another tax planning opportunity here with this. When I bought my house and they were doing, it's like being a mechanic when you go buy a used car, right? They can't pull a fast one on you because you know you're in the industry. It's like, I know
Right.
what you're doing, man. So I told them, I'm sorry, I don't want the escrow account. She stopped and she's like, wait, what? I said, I don't want the escrow account because it's not free, right? And she said, right, it's not free. There's a charge of XYZ. And I said, yeah, I know. It's not cheap. For at least the one they were offering me, it was like 300 or 400 bucks a year that they're charging you to do it. So I don't know if it was just the bank I was dealing with, but let's say whatever, right? Now, what is it that you're going to see immediately? So immediately, if you have that, get rid of that escrow account. They're no longer going to charge you that money on it. So first thing you're going to see is your monthly mortgage payment is going to go way down because now it's just your mortgage. It's not the property tax portion. If you're disciplined enough, you save that money. Save that money, put it aside, sock it away throughout the year so that when you get to that end of the year, you make that payment yourself. Okay, that alone right there, you've already saved the money that the bank's charging you for that escrow account. All right. Number two, here's the planning part of it. Itemized deductions. We were talking about itemized deductions, right?
Okay.
Those are capped. There is a cap on those.
Mm-hmm.
Um, sorry, not itemized deductions, just deductions in general, certain deductions. And I believe that the limit is $10,000. Once you hit at least $10,000 in certain deductions, that's it. If you paid more and you got more deductions, that's it. They're not going to give you any more. You are capped. We are talking about things like your mortgage interest and your property taxes combined, all of those. If those exceed $10,000, you're not getting any benefit for paying, basically prepaying your property taxes. So here's
Mm.
Oh.
what
Yes.
you do in a to plan. You're getting to the end of the year. You got your tax software because you saw this great YouTube channel that was telling you to go get your software and do your own tax projection.
Uh,
You use the software not just to file your taxes throughout the year. You create a new little file in your tax software and you call it tax projection. And you start updating it with the numbers the projected numbers for this year, and that enables you to see what your tax picture is going to look like months in advance before it's time to actually
Hey, okay.
go through the reckoning process, right?
Mm-hmm.
So you're doing that exercise and you see, oh, well, look at that. I'm about to hit that $10,000 amount. Does it make sense for me to prepay my taxes? No, it doesn't, because I'm not going to get any benefit for doing that. So I'm just going to pay. It's usually broken up into two installments, right? So I'll pay my first installment. That'll get me X amount, and I'll wait until the next one is due, which is usually April, February, April of the next year to make it. And maybe next year my tax situation is different and I can take advantage of that deduction. Otherwise, if you're paying it through your bank, you don't have that choice. That is automatically going to be made for you on the time. So you don't get to play around to see if you're going to take advantage of the deduction or not. So that's another planning opportunity, but it's another saving opportunity. If you are disciplined, now that is the key. If you're
Right.
not disciplined, if you're going to see that extra money and you're going to go blow it on something else, forget what I just said. Keep the escrow account, pay your $300 a year, and don't worry about that tax payment when it's due. But if you have the discipline, then that's another area where you can save a little bit of money.
And you know what, Nate? I thought if you had a mortgage, I thought you had to have an escrow account. This is the first time
yeah.
ever that I didn't know. I don't.
Me either.
Right. I
No,
thought
I
you
didn't know
had
that.
to have one
Right.
because you had a mortgage.
Yep. Nope. You do not have to have an escrow account for your property taxes.
And it's good how they don't tell you don't have to have one. They don't present that to you. They just say, hey,
They automatically do it. They don't
yeah.
say
They
anything.
don't present it to
Eh,
you like that. Yeah.
Yeah.
Well, I'm glad
No.
you shared that.
You're excited to have your home. You're excited to be a homeowner. Sign here, sign here, sign here.
Yep.
Worry about it later.
Yeah.
Wow. I didn't know that. Okay.
Yeah, that was good information.
Right.
Another nugget. Okay.
Yeah.
Thank you, Nate. So Nate, so let's talk about taxes after the deadline. So tax extensions. Could you tell us how that worked on tax extension?
Yeah. Like when would people need to
Yes.
ask for an extension?
Yeah. So the tax extension is there for people who cannot file by the deadline, but the IRS still wants their money on time.
Oh yes.
Oh.
So so this is what you have to realize. You are extending the deadline of the submission of the paperwork,
Okay.
okay? Where you're going to calculate the final numbers and come out to the final amount.
Mm-hmm.
But if you extend beyond usually April 15th, which is the deadline, if you're extending beyond that and you had a liability, they're going to go back and say, you should have paid that by April 15th. So now we're going to charge you interest because you didn't pay it until you filed your return. Okay.
Okay.
So usually the way a CPA would do it or a professional tax preparer would do it is they would pull up your tax projection. So they would do a basically a mock filing of your taxes without actually submitting it and say, look, Johnny, Teresa, I've prepared your taxes and it looks like you're going to have a liability of $1,000.
Mm-hmm.
So we're not ready to file the taxes because we're still gathering paperwork. You're still gathering paperwork, but we're gonna submit this extension request. But with it, you're gonna pay that $2,000 that you're thinking we're gonna owe, right? And usually a CPA will have you overpay a little bit to
Uh-huh.
buffer themselves. So if you owe like 2,000, they'll say, let's pay 2,500.
Mm-hmm.
You're gonna send that check to the IRS. The IRS is gonna cash it immediately, 2,500, and then 6 months later, when the actual paperwork is due because you
Mm-hmm.
extended, you're gonna file the actual paperwork with the actual numbers. And if you overpaid it, then they'll refund you the overpayment. If you underpaid, then they're gonna hit you with a penalty for paying late, and then for interest for however many days, because the IRS charges interest on a daily basis. It's a daily calculation on interest that you have in there, so it's compounding.
That is scary, scary, scary,
Yes.
scary.
My.
So now that we're talking about the lovely IRS, the one that we truly love, let's talk about IRS debt. I have a family member that because she owes Uncle Sam, she has not filed her taxes in years. So can you talk to the audience a little bit about the IRS debt and the seriousness of it and consequences of not paying it?
Yeah, IRS. One Here's the one takeaway. don't mess with the IRS.
Amen.
Okay,
Amen.
don't mess with the IRS. If you owe it, just fess up. Reach out to them. Now, if you have a debt that you can't pay, the IRS will work with you, and they will say, okay, you owe $50,000 in back penalties and all that. Okay, if it's that amount at that point, you need a specialist. Okay, you need a tax attorney on your court. You don't go by yourself to the IRS and say, okay, have at it. No, go to a tax specialist. They're going to take all your returns going back to however many years that you've been owing money. They're going to do all the calculation, and then they're going to go negotiate for you with the IRS, right?
Uh-huh.
It's almost like a debt consolidation service.
Oh,
So
oh.
that's what you need in those really bad, ugly cases. All right. If it's not that bad, if it's this year, you're kind of seeing, oh my gosh, I was messing around with my tax withholding. I put that I had 50 deductions on my W-4, and now I got this big bill. Well, you're still liable for it, but the IRS will work with you, and they'll say, okay, well, we'll do a payment plan, and then they'll do it that way. If you don't say anything, listen, it's not going to go away on its own. Usually, the minute you go apply for a job and you put in your social security number, they have you on the registry. As soon as that employer files the information, the IRS knows, oh, this person owes us money. Guess what? We're going to start garnishing your pay. So you're going to be working for nothing. And as soon as your paycheck comes in, it's like, wait a minute, how come it's zero? Oh, sorry, the IRS took it all.
Oh,
You do
oh,
not mess with the IRS. Do not mess with the IRS. You gotta, if you owe something, come clean, work with a tax attorney if you have to, but figure out a plan to get out of that situation because they have a lot of ways to get you.
Can they put a lien on your home?
Yes, they can put a lien on all sorts of things. I don't know if on the home, but I know they can definitely garnish your pay, and they can do other things. I mean, it's the government. It's like you're going to the war with a water pistol. Do not go there.
Because you won't win with the
you
water
won't
pistol.
win.
So your recommendation to the audience is if you owe IRS debt, pay it or call them and make a payment plan.
Yes.
And when
Yeah.
you do have this debt, you're definitely going to have to pay daily interest. Is that how they still do it on a debt?
Oh yeah, it'll be ugly. If it's been years, it will be ugly. So in those cases, you definitely want the advice of a good tax attorney that will figure all that out for you.
Wow. Okay. Well, thank you
Wow.
for that information.
Wow, Nick, that's scary and powerful at the same time.
It is. Like you said, do not mess with the IRS. It's the government, and they can do whatever they want to do to get their money.
Yep, and they will.
Yes, they can. Okay.
Wow. Well, Nate, listen, has been actually a wonderful, wonderful conversation about, taxes and preparation and tax strategies. And so we really thank you for your time that you share with us here on the Money Talk. And we really look forward to you coming back again to have further discussions in reference to finances, money. So thank you, Nate, for your time today.
Yeah, we appreciate it. And you even taught us some things.
Yes.
So I'm sure our audience is going to enjoy listening to you because everybody's getting ready for the tax year, I hope, and not running from Uncle Sam. So again, we just want to say thank you again for giving us your time and your expert advice.
Yes.
Of course, my pleasure. So glad you guys had me, and I can't wait for the next time we talk. That was so much fun. The time flew.
Thank you.
All right.
Thank
Well,
you,
thank
Nate.
you. And we'll be booking you again for the next show. Okay.
Yes.
Sounds good.
All right.
Thank you.
See you later, Nate.
Bye, Nate.
Bye bye.
We hope that you enjoyed our content from the tax expert. We hope that you're going to have your taxes in on time by April the 15th. If you owe Uncle Sam some money, please don't avoid it. You don't want to get your money garnished. So if you owe Uncle Sam, pay Uncle Sam. Get your taxes in by April the 15th.
Yes.
If you don't have your taxes done and completed, please request an extension. But with that extension, know that you will be paying a penalty. So if you found this information valuable about preparing your taxes for 2024, please like, subscribe, and share our channel. We'll be back here next Thursday with more information about, guess what? Money.
Money, yes.
See you next Thursday. Bye.
Bye-bye.